This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning and we are as always coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Reema and Nigel. Morning guys.
Hi, good morning.
Things,
Waiting for you to speak.
I mean, things are looking a little tricky, right? I mean, around the debt ceiling, no progress. Markets are worried. Politicians are saying, don't worry. But markets do their own thing. And I think that's exactly where we kind of kick off from. So let's just run you through what you need to know as we begin another fresh trading session. So there was little progress on the deadline, the debt deadline, and that weighed on markets. So we were saying yesterday, same time, how, I mean, the prior session, US markets for the first time in many weeks were a little worried. And that worry at the margin did continue. So US House Speaker, who is, of course, the main man negotiating with the US President, the leader of the Democratic Party, is Kevin McCarthy. And he basically said, this is a statement which came after market close, after the market had already ended lower, that there should be no fear in the markets. I mean, these were Bloomberg headlines which came through. This statement did lift US equity futures a little bit, but did not really unwind bulk of the sort of heaviness or the damage that we saw during the cash market. So, I mean, during the session, US markets were lower, the S&P, the NASDAQ. I mean, to be sure, on the NASDAQ especially, the tech stocks, there was a bit of a lift which came through in the last couple of hours of trade, but they ended firmly down, 0.75% down on the S&P, the NASDAQ down about 0.6%. Now, the other thing is that, markets are very rapidly pricing out rate cuts, and they're pricing in rate hikes. And this is kind of a constant thing we've observed for the last year and a half. Markets get very ahead of themselves, start to say, well, inflation is done and dusted, and the peak is in, and the rate cuts will start at some point in the future. And that has always, at least there have been big 3 or 4 instances in the last year and a half where it is unwound. The 10-year yield now is at about 3.74. It went up a little bit. The dollar index is now knocking close to the 104 level as compared to the 101.5 we were not very long ago. And this is, I mean, the dollar, of course, is also a function of growth dynamics, right? I mean, if you look around the world, Europe growth is nothing to talk about. China is noticeably weakened. And the one economy which still continues to be pretty resilient is the US, and that's the dollar for you. Okay, let's just come to the market here. So the global handoff is not all that great. It's not all that positive. The Nifty and the Bank Nifty both ended lower. The broader markets were a little better. If you look at the S&P, if you look at the mid-cap index, the small-cap index, those indices were up about 1/4% respectively. Advantage decline overall yesterday was about 1:1. But, I mean, the advantage is still very much with the bulls, with the number of stocks which went up in the broader space, supported by volumes, as opposed to stuff which went down on little volume. So I would still go with the fact that the advantage is with bulls. On the index, I mean, if you're just looking at the Nifty and want to take a trade, the pivotal level still remains at 20-day moving average, which stands at 18,198. And I've said this yesterday, day before that, that is the short-term trailing stop loss, trailing reversal kind of level that you need to keep a close eye out on. And that is about 100 points away from where we left off yesterday. I mean, a firm close under the 20-day and then below the low that we saw in late March, 18,060, I think will confirm a complete kind of turn of events. But that's still some distance away. Watch the 20-day carefully first. On the Bank Nifty, the 20-day comes in at 43,503. And those are, again, I mean, that becomes an important reversal level to watch out for. On the way up, I mean, the Bank Nifty will eye the all-time high, which is around 44,151 point something. And that's a near-term upside level, above which, I mean, you can look for more upsides coming in. So, I mean, I think another middling kind of session. There are no real big tailwinds or there are headwinds, but the market's been kind of climbing the wall of worry. So let's see. Yesterday, the market sold off at open. There was a big rally which got sold off. There was a bit of a buying again. And finally, in the last 40 minutes, there was a final sell-off. So it was very volatile all over the place. And this morning, SGX is indicating another 45, 50 odd point lower start, closer to 18,240. Sriva.
Hi, I was just checking that India, through all this, has been very resilient. If you pull up the week-to-date performance of India vis-a-vis its Asian, European, or even US market peers, you would see India's stark outperformance. The Nifty is up about 0.5% so far this week, while the key European markets like the CAC, DAX, and the FTSE are down anywhere between 2 to 3%. US markets, the Dow slipped for the fourth consecutive session, and this week Dow Jones is down close to about 2.5%. Even compared to Asian market peers like Hang Seng China, Hang Seng, by the way, is now at a 2-month low. India has starkly outperformed. So that's point number one. Today, of course, is the May series expiry, and it's been a good series so far. In the May series so far, the Nifty has seen a rally of 2.2%, and we've seen net institutional inflows of nearly 15,000 crore rupees in the month of May. So in the month of May, the FIs have nearly bought 20,000 crore rupees, while the DII selling has been restricted to 3,300, 4,000 crore rupees thereabout. The Asian market picture is a bit mixed. So Hang Seng, China are both under pressure. There are concerns about this new COVID wave in China further hurting demand over there. So that's dragging Hang Seng in China lower. But Nikkei and Taiwan, Nikkei, of course, has been the rank outperformer, but Taiwan is also benefiting because the technology shares there are seeing buying after Nvidia came out with blowout numbers and guidance yesterday in the United States. So many of these chip companies, technology companies in Taiwan and Kospi are seeing some buying. So the Asian market picture is a bit mixed, but the SGX Nifty is suggesting a slightly lower start, currently down close to about 1/3%. But Nigel, we know, right, on expiry day, in the last hour, everything can change.
Well, that's right. The second half of trade is going to be volatile, particularly the last hour of trade. It's going to be a test for the bulls today, because of the kind of cues that we have. We have a stronger dollar, we have crude prices are higher, and the bond yields as well have moved up. So it's a bit of a test out there. The Nifty, well, we're moving to around the 18,400, 18,450 odd mark, and the bears are coming into fight. So that's going to be a crucial resistance zone. In terms of what the FIs did in the F&O market, well, they added yesterday some short positioning, close on 4,500 shorts. The short positioning is mildly in favor of them, 51% of the positions on the short side. On the index option side, well, they bought more calls than puts. But what's telling you at higher levels, you're likely to see supply, is the way they wrote calls yesterday. 1.3 lakh calls were written. And on the Nifty itself, 18,350, 18,300 call. Between them, there was close to around 90 lakh shares that were added. So there was writing being seen out there. But the kind of writing you saw from the FIs, you'll say it wasn't only the Nifty. The Nifty Bank as well, you're seeing that there was a fair bit of open interest built up. I was looking at the 43,900 call and 43,800 call. And it seems the bulls, well, they're trying. They're attempting to get past that 44,000 odd mark, but they're not succeeding in conquering that mark. Take a look at the last 5 sessions. Every day we go to that level. Every day 44,000 is the mark we hit, and then we come off that mark. So that's telling you that 44,150, which is the recent high, well, we'll like to see a bit of a resistance at those marks. If we can get past this mark somehow or the other, then in fact we're bracing for a bit of a bounce. Yesterday we came off close to 330 points from that point itself. So let's get straight to the levels then. The 20 DMA, that's around that 18,200 odd mark, but I'm looking at the 18,180 mark, because the 18,200 put has the highest open interest. And since today's expiry, we'll be watching out on that mark. The premium on the 18,200 put is around 20 rupees. On the upside, going by the options data and the call writing that we're seeing, 18,350, that'll become a bit of a resistance zone. On the Nifty Bank, 43,900, I'm not going to 44,000, 43,900 is a bit of a resistance mark that we are looking at for today's session itself, because the kind of open interest build up we saw at 43,800. And on the downside, since the 43,500 put has a fair bit of open interest, I'm looking at the 43,400 odd mark. The SGX Nifty was indicating a bit of a subdued start, 45 points lower. 18,180. If you think, that the dip will be bought into, that becomes your crucial stop loss. You risk it, keep a stop loss of around 20, 30 points odd, and hope that you see a bit of a pullback. But sustainability is going to be a question mark, because yesterday as well, you bought the dip, you made some money, but you need to take some money off the table because we're in that sort of a range-bound market. Expiry day, so things will get volatile.
I think that we can be rest assured of, that there will be volatility, and especially on a day like today.
Markets aside, Prashant, did you watch the IPL yesterday?
I wanted to, Nigel. But
Brilliant performance by Mumbai Indians. Yeah. It was absolutely phenomenal. You thought they didn't have enough runs on the board. Yeah. And you come in there, they bowl their heart out, and wow. It was
101
great.
all out,
101 all out, against the Lucknow game.
I've not watched many games, but every game that I've watched, there's always been one kind of standout performance, standout player, and that's been I mean, actually pretty heartening to watch.
You know, I thought, like 4 years back, that maybe IPL momentum would wane a bit, the viewership.
Oh, no.
But now I've realized that there's a new cohort of viewers and fans, and that's my son and all his friends. So every morning when they get into the bus at 7 a.m., everyone is up to date. Who made how much, who bowled, who got how many runs, who was the man of the match. They're all up to date, and these are kids who are 5 and 6 years of age.
Amazing.
So there's a new breed of fans for IPL this time.
Absolutely, and good to see Mumbai coming on top yesterday. So good fight back.
Oh, absolutely.
One more match tomorrow. Tomorrow 7:30, Mumbai Indians play Gujarat Titans. The winner will take on Chennai Super Kings on Sunday for the finals.
All right. Well, we'll quickly tell you what's lined up over the next 30 minutes or so. We'll get you updates from markets across the globe. Dean Kim of William O'Neill will join in just a bit. We discuss the global setup with him. We get you CNBC TV18's list of top 10 stocks for the day. And at 8:30 this morning, Deepan Mehta will join in of Elixir Equities with a quick take on things.
On the equities, Ellen Zentner of Morgan Stanley says the FOMC minutes showed a split committee on how much more policy tightening is needed. A June pause will be hotly debated. They see a path to consensus on a pause that underscores additional tightening could be needed should the data be uncooperative. A softer May core CPI will be the final data in hand that will be tracked.
Okay, this is a local view now coming in. Samiran Chakrabarti of Citi kind of weighs in on the urban versus rural slowdown debate. He says, and I quote, labor market trend corroborate high-frequency data, which is still not showing any broad-based slowdown in urban consumption. While on the other hand, any upward momentum in rural economy is not getting sustained for a prolonged period, with core drivers there still soft.
Let's get you the money market views then. On the rupee, Parul Mittal Sinha of Standard Chartered Bank says the USD INR has moved higher in line with the generic USD move and unwind of the carry position. With the dollar yuan breaking levels of 7, there has been a rapid move higher in the rupee as well. The positive buzz around the USD INR continues, and 82.25 against the dollar remains the support and 83 against the dollar as the resistance, with reserve build-up having taken place in the recent weeks and macroeconomic factors much more positive than last time. The currency was at this level. An immediate break of 83 against the dollar looks unlikely. However, risk to the view is risk-off move in equities triggered by a debt ceiling stalemate or default.
Well, in bonds, Parul Mittal Sinha of Standard Chartered Bank says that domestic bond yields edged lower last week post 2,000 rupee note withdrawal. Rate market sentiment stays positive and cooling domestic inflation expectations of likely change in stance in June policy and favorable demand-supply dynamics in bonds in the near term. Parul expects the benchmark 10-year bond yield to trade between 6.9 to 7.05 range next week. U.S. debt ceiling decision and OPEC meeting could be the key drivers of rate markets.
Well, there's a lot of stock-specific action. We'll get to that in just a bit in our special Top 10 segment. But the stocks that we're looking at is LIC, Nykaa, Nalco, Phoenix Mills, Fine Organics Industries, Gujarat Gas, Piramal Pharma, and Borosil Renewables. They are stocks on the back of positive news flow. On the flip side, you have Oil India and JB Chemicals. That'll be on our radar, could react to negative news flow.